Hello, my name is Dennis Fugel, Chartered Professional Accountant, Winnipeg, Manitoba, Canada. Today I would like to talk to you about real estate and real estate transactions when you have more than one property. For example, you have primarily residency in Manitoba and you have spare money and you would like to purchase another house for investment purposes in different province, let's say BC. So, few things that you should think about. First, are you planning to live in a BC property in a far future, in your retirement maybe? Should you take amortization? And can you use any tax elections to shelter the gain from the change in use? For tax purposes, any change in use is a taxable event. And what I mean is, the house that you're living, if you're moving out and not selling and changing it to rental property, this is change in use of your property, and this is taxable event. And it means that because it's taxable event, any capital gain will be taxable in your hands. But you're gonna say, Dennis, whoa, 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 stop. What's happened to principal resident exemption? Yes, it's coming and sheltered, and you're receiving a relief from a sale of the property. You are right. But what's happened when you're coming back? You remember, if you from a rental, you're coming back to your place. You stop renting from some reason, you decided to come back to your home. Again, it's change in use. Change in use of your property, it's a sell transaction. And in this time, you are gonna pay gain. You are gonna pay taxes on your capital gain. Okay, and it depends. If you did not do anything, okay, let me clarify myself. If the person did not file any elections, nothing, okay, when he changing the primarily use of his property from private to rental, there will be need to calculate capital gain. This capital gain can be sheltered by principal residence exemption, and there will be no gain in his hands. Maybe will be no gain in his hands. Let me be more clear. It's need to be calculated, okay? And then the person left to another province or living in a more expensive rental, and he receiving for free a nice neighborhood and bigger house and for free because the rentals that he receiving cover it, okay? And then he decided to move in. When he moving in back to his property that he rented out, again, this is taxable event, and because we did not file any elections, so when he moved out, if there was a deemed disposition, they sold his property on a paper. Nothing changed, title didn't change, nothing changed, ownership didn't change, but for the tax purposes, this was a sell. And if he purchased this house for 100, and in the moment when he was moving out, the fair market value was 300, so now he sheltered 200,000 on the paper, but now the cost of the house is $300,000 in his hand. When he moving in back, and the fair market value 400, so he sold this house for 400. 400 minus 300, because it's a new taxable cost of the house, $100,000 is a capital gain. And this gain will be taxable in the hands of the owner of the house because he moved in. And he's gonna pay taxes, and it's not sheltered by anything. Okay, this is the consequences when you're not filing any elections. Okay, so in order to avoid the situation, please come to your CPA, local CPA, and ask for advice before you doing any moves or before you even purchasing the second place, or think about at least, are you planning to move in or not? Okay, this is the first situation. Now, what's happening when you have filing election? When you do file election, you change the use of the property from primarily you're no longer living, now you rented it out. Now you file election and notifying the CRA, listen, meanwhile, I would like to keep reserved under my name this house as my principal residence. We can choose, but let me put it in a more simple way, okay? I would like to reserve it, and meanwhile I'm gonna rent it out because I didn't decide what I'm going to do, and I'm moving out to a different place, okay? So CRA knows that there is no taxable event right now, no taxes, because the taxpayer filed actually the election and said, listen, I changed the use of my property, but please do not tax me because I didn't decide what I'm going to do with this property, and it's valid for 4 years. So you have 4 years to decide what is going to be with this property. Okay? The same with the Winkler. Any real estate, any house that you have, you need to file election if you're moving in. So you move out of Winnipeg, Manitoba, and you move into BC. So you file elections that you're changing from primarily residency to rental, and you file election. Now you're moving to the house that in BC, you file election because it was in your second house as a rental, and now you're changing to primarily residence. Probably you don't know yet, but you filing election with the CRA. Listen, please do not tax me. I'm going to live right now in this property, and again, you have 4 years to decide which property you can claim principal residence exemption. And your principal residence, not principal residence exemption, your principal residency. And after that, of course, it's a principal residency, you can claim principal residence exemption. Okay? So on each property, you need to file election. And in this case, you do not have taxable events. So you're going to say, what's happened after 4 years? After 4 years, you actually do have taxable event. And this we can not play, but we can calculate. For example, you move out from Manitoba to BC, you like more than BC, you after living there 2 years, you decided, yes, this is a place that I want to be, this is a place where I plan my retirement, and I won't come back to Manitoba. No problem at all. So in the 40 years when it's come down, we can claim, again, we can claim principal residence exemption for the years that you lived in the house. And for the years that you did not live, you're going to pay taxes, small amount, okay? Because it's like dim disposition and then fair market value, and some portion you may pay or you may not, okay? These are calculations that need to be done. And then the same with your BC property. Now, again, we need to inform the CRA what's happened, and then changing use. Changing use, there is also another section 54 that we can use another 4 years, because this is designations, not become a little bit complicated, but actually you can shelter more 4 years while the property was under lease. We can claim that it's actually was your principal residence, and can add you 4 more years to the calculations, to the formulas that need to be calculated to your capital gain. And then there will be taxable event over there that you need to pay taxes again, also a little bit taxes, and then you can continue to live over there. It's not the change in use, it's basically you different tax event. Not now you're gonna pay. You are going to pay, but you're gonna pay actually when you sell the house, or not actually when you have sell the house in the end of the 40 years, okay? Because you have time to decide, okay? So you're gonna pay a little bit of taxes on one side, a little bit of taxes on another side, not so critical, not so crucial, but in the end of the day, it's much better if you're not doing anything, if you're not filing any elections. Like in the first time I tell you, if you're not filing elections and you're coming back from BC to Manitoba, and now house worth $400,000, and when you sell on the paper 300, you have $100,000 in your hands, capital gains that you're going to pay taxes, and then you'll be taking again capital gains that we're going to pay in BC. So it's a lot of money, a lot of taxes to pay on it, rather than file the selections and to pay a little bit here, a little bit here, or maybe not to pay at all. It all depends on the situations. All depends how we play with elections, how we basically sort out the elections, and going according to the Income Tax Act. Okay, there is no like black and white. There is black and white actually over here. There is black and white because it's written exactly what you allow and what you're not allowed to do, how you should do it, what you should do it, what is the rules that you need to follow in order to have this election available. For example, if you took amortization on a property, this election is not available for you. If by any chance you not follow agreements that you had, the elections won't be available for you. So this is very important in the first place when you're buying the real estate, that you should decide to yourself, either you're gonna live in this, you planning to live. If you're planning to live in property in the future, if you say never in my life I'm gonna live in this property, so maybe it makes sense to take amortization. I don't know. Everything is calculation. There is no right now answer or formula to tell you, yep, you should take amortization or you shouldn't. You should designate or not. It's every situation need to be tailored and it's different and have nuances that particularly only can fit your suit, your situation. So in order to know the situation, please come and advise your local CPA. He gonna hear your situation, he gonna advise you. He also can calculate for you numbers and give you plus minus the taxes that you can pay today in today tax brackets, okay? Because the income tax changing, the tax brackets are changing, the amounts are changing. So we can calculate for you right now that you will have a sense, dollar sense, how much it's gonna cost you all these things. So before you doing a move, before you even buying or you're planning to buy a house, please come and see your CPA. Have an advice, talk to him, and listen what he has to say to you. There's some minds that you need to avoid, because by making decision, for example, to claim amortization on your rental property, you immediately eliminating section 45 change in use, and it's not going to be available for you when you're planning to leave from Winnipeg, from Manitoba to BC, or vice versa. Doesn't matter in which province you, but from primary residence to your other residency, this won't work. And then it's taxable event, like I explained in the first time, and then you regret, and then you want to come back, and again it's taxable event, second taxable event on the same property. So your decision can cost you a lot of money. So in order to avoid it, to avoid the mistake, please ask CPAs. They will know the answer. They can advise. They can tell you what can be done. We know the rules. We can follow the rules. We can advise you what you need to do and how you need to do in order to minimize the tax liability in the end of the day. Moreover, for each property you need to file the election, for primarily property and for rental if you're moving out and in. More than that, these elections, CRA not going to allow you to play with the elections. So it's not that you move from Manitoba to BC, from BC to Manitoba, and you're jumping from the properties. You can jump. You have 4 years to decide what you want to do. But after these 4 years, the decision need to be made and clear. Okay? CRA also, by the way, this you say, and what's happening if I moved because of my work? For example, the spouse working for a government, or spouse working in the military, armed forces, defense armed forces, or RCMP, and he need to move every time from province to province. Then CRA totally understand the situation and took it in consideration, and then saying, when you're moving because of the work from one property to another property, from one province to another province, or inside the province, depends. You lived in the south, now you're going to the north. I don't know, depends. We basically allowing you to have the change in use indefinitely, because it wasn't your voluntarily decision. Somebody make you to move from one to another because of your job. Okay, if it was because of your job, then change in use can be indefinitely until you're gonna come back to a property. Of course, when you're doing this, your CPA, when he preparing personal tax returns, there's supposed to be attached a letter, because it's done by the letter, and then you explain the situation to CRA, to Canada Revenue Agency. It's attached to a file, and it's submitted. Now you're gonna say, well, what's happening if I'm not gonna notify, or I gonna, I did election and then I'm not notifying. 4 years pass or 5 years pass and nothing happened. So according to the law, first of all, we need to track it, and you need to track it, and we need to report that there was a deemed disposition. One, it's sale of your property on a paper, okay? Second, say they have matching department, and this matching department, this is the purpose of it. It's to match the papers that you're submitting or you gave to the programs to actual what's happening. And matching department also can find the things and can catch on this, or it can be catch when you actually sell the property too, because we're gonna submit all the papers to the Canada or Revenue Agency, so they can ask, and then they can see that there was change in use, but then you didn't do anything on time, so that was a sale, and now there's an actual sale, and there's a huge mess in your books, but there's a taxable events that need to be happened, that you should pay taxes long time ago, and there's interest and penalties and all these things. So in order to avoid all this mess, please, before you making any decisions, talk to your CPA, receive an advice, come for consultation, see what options you have, what the tax consequences of your decisions right now or in the future, in order to avoid any inconvenience that can happen because of the decision. Or you can think, oh, I don't need anything, I spoke with my real estate agent. Well, everything is good, but then come with complaints to real estate agent, not to anybody else. If your real estate agent know income tax acts like he with his closed eyes, no, not a problem. Tax world is complicated world, because even that the property is yours, but according to the tax rules, change in use, taxable event. Okay? I can tell you even more, not from the tax purpose, not from the tax what. Even if you had something and it has been stolen from you for the tax purposes, the event of somebody steal from you something, it's a sell. It's not voluntary, I agree. Somebody stole it from you, but it's a sell event, okay? There's a taxable event on a steal, yes, on a theft. Sorry. Okay, so whether it's fair or not fair, this is a lie, this is a reality, and this is how it's interpreted. So just to let you know, even this property is yours and you're moving in and out, can cost you money, because will be considered as a change in use of your property, and change in use of the property is a taxable event. I still have another topic to talk about, again, real estate. It's also very fascinating. I will do the second video because the first video on this topic is already too long and taking too much time. I don't like that my videos too long, because people don't have a patience. Me too. I don't like to see long videos. I would like to see more shorter videos, short and sweet, and that's what I'm trying to do with mice. If you have any questions, please go to website alphabetacpa.ca, or write me an email, info@alphabetacpa.ca. Write any comments in YouTube. I will gladly answer your questions and can call you back and answer your questions. Have a nice day. Bye bye.